Are you thinking of buying a car even when you don't have the capital? In this situation, requesting financing can be a good solution. However, one of the best ways to save money when you want to buy a vehicle is to resort to car financing. Today, new and used car customers are faced with a problem that can hardly be overlooked, not only when it comes to choosing a model, but also when it comes to paying for the new car. The different types of car financing must be compared with each other before you make a decision. Almost all people who buy a car cannot pay for it in cash, even if it is the cheapest way. Most buyers have to resort to car financing. Throughout this fantastic video today, we will cover everything that every living individual should be aware of regarding automobile financing and how they operate and make life easier for you while you enjoy your vehicle. This is yet another life-sustaining piece of information, which we will reveal to you in this video, so please make every effort to watch the entire video from beginning to end. This is Finance Advisor. If you're new here, we specifically welcome you, and at the same time, officially invite you to join our adorable fans. Kindly subscribe, click on the notification bell, and don't forget to smash the like and share button. Most importantly, your comment is highly welcome. Today's video will enlighten you on automobile financing, especially easy ways to finance the purchase of the car of your dreams without stress. Some ways which you can use in financing the purchase of your cars are: 1. Personal loan. One of the most popular ways to finance a new car is getting a personal loan. This involves borrowing money to fund the purchase, often from a bank or building society. When you buy the car, you instantly own the car. You then pay the loan back to the lender, with interest on top, over a time period to suit you. The amount of interest varies from lender to lender, and usually depends on the duration of the loan, as well as your personal circumstances and credit score. This option is particularly good if you're in it for the long haul and don't intend to change cars very often. 2. Bank financing. The most common is the request for a personal credit for the purchase of a new car. Some banks already offer the option of a car loan, intended specifically for the purchase of a vehicle and which carries a fixed interest rate. This method of financing your new car allows you to deliver an entry, pay the credit ahead of time with a penalty of normally 1% of the amount delivered, and sell the car before the end of the financing contract. To finance a new car with a bank in the most economical way possible, you must compare the conditions offered by different entities. The key is the value of the APR annual equivalent rate. The lower it is, the less interest you will have to pay and the cheaper the car will be in the end. Frequently asked questions before financing the car. Here are answers to some of the most frequent questions that usually arise when you want to finance the purchase of a new car with a bank. Can they deny me the loan? Yes. The financial entity may estimate that your salary or the absence of guarantors are not enough to pay the amount of the loan. How many years can I finance? You must bear in mind that the more years, the more money you will have to pay for interest. It is recommended that the figure never be greater than 7 years, although it will always depend on the fee you can pay per month. Can the car be returned in case of not being able to pay? The answer is no. Banks do not repurchase this type of property, so the only solution you have is to sell the car and pay off the debt with your bank with the money obtained. If I can't pay for a month, what do I do? Many banks allow a grace period of 3 months during the loan period to temporarily defer payment, but this time must be negotiated at the time of contracting. Could a car be financed with a salary? Yes, although financial entities will put obstacles in your way if you have any other type of loan, such as a mortgage. 3. Dealer financing. For a few years, manufacturers have offered an internal financing service offered by the brand itself through its dealers, especially for the purchase of a car. Except for offers, this type of financing involves a higher interest rate than if you finance with a bank and can put some obstacles when it comes to advancing the money before the end of the contract. They also do not allow you to sell the car before finishing the financing. 4. Leasing. Leasing is a rental contract with the right to purchase, very similar to renting, except for a few details. Leasing differs from renting. The administration of the vehicle is at the customer's expense. It has a minimum legal duration of 2 years and no time limit, a fixed or variable monthly fee, and does not usually include services such as maintenance, repair, tires, or taxes. At the end of the contract, you have the option of buying the car, paying the residual value, or returning it. 5. Hire purchase. This is a very common method of automobile financing. A deposit is required, and there are fixed monthly payments. The car is owned by the hire purchase company, and you are essentially only hiring it until you make the final payment. After this time, you own the car. Hire purchase is the only finance option offered by some car dealers. 6. Cars financed without entry. Whether with or without down payment, you can finance your car in full credit or by contributing part of the capital at the beginning. The entry represents an amount of capital that the client contributes, relieving a little the monthly fee and amortizing part of the value of the vehicle. To know how much it is okay to pay up front, a famous rule called 24/10 is usually applied. It is very easy to understand. It gives 20% of the amount of the car as a down payment, pays over a maximum of 4 years or 48 part payment, and that the monthly expenses of the car do not exceed 10% of your salary. 7. Car renting. An option that is gaining ground in recent years. This modality through contract allows you to pay a fixed monthly fee and in exchange, have a new car, comprehensive insurance, repairs in case of breakdown, replacement vehicle, roadside assistance, tire replacement, maintenance, claim for fines, and all taxes and expenses derived from the purchase. As a general rule, the contracts last for 4 years, although the car will never be your property unless at the end of the contract you decide to keep it by paying the rest of the value of the vehicle. 8. Personal contract purchase. The first thing to note about PCP is that you don't own the car. Once you agree to the company terms and conditions, the manufacturer owns the car until the balance is paid in full. If you decide to make the optional final payment when the contract ends and the car is yours, as you've effectively paid off the entire loan. One good thing about the PCP is that they offer the lowest monthly repayments over a fixed period compared to hire purchase deals. Follow the said strategies. I believe you now have a good knowledge of car financing. You may decide on the choices of automobile financing you're going for and become a car owner today without much stress. If you love the effort we've put in here to create a great content like this, kindly join us by clicking the subscribers button and activate the notification bell to be the first that will view our next interesting videos. Until next time, please write us your thoughts about today's video in the comment section below.